Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Already 16 problems I have completed on electricity companies. First 8 problems on preparing the financial statements and next 8 problems regarding capital base, reasonable return and surplus. Now last 4 more problems are there. These problems are on replacement of fixed assets. Now in this video 4 problems I am going to complete on the topic of replacement of assets. The Electricity Companies Act has given a separate procedure of how to replace the fixed asset. In normal business, the procedure is different. Whenever a fixed asset is disposed of, sold, then we calculate any profit or loss on that, charge that profit or loss on the P&L account, revenue charge, and purchase a new asset, and it is fully capitalized. That is the normal procedure in single account system. But under double account system, a separate procedure is there how to replace a fixed asset. In this double account system, the first step is the value of the old asset will remain intact. That will not be touched. The present value of the old machinery or old fixed asset will not be touched. Now we calculate the replacement cost. If we purchase the same asset at the present rates, what would be the replacement cost? We calculate. From that replacement cost, deduct the sale of scrap or the material which are used from the old asset to the new asset. We deduct that scrap value. The replacement cost we calculate, from that deduct the scrap value, the resulting figure will be a charge to revenue account. Will be a charge to revenue account. That means profit and loss account will be debited for this amount. Secondly, how much to be capitalized? We calculate what is the cost of the new asset. From the cost of the new asset, we deduct the replacement cost which we have just now calculated. The resulting figure is the amount to be capitalized. And this procedure we are going to apply in the coming problem, 17th one. So, see the 17th. Before starting the 17th problem, I expect my viewers to have a printout of the problems I have given in the link. So take a printout and keep it ready before start watching this 17th problem. Now, the directors of the New Talkies Limited, having received complaints from their sound engineer regarding the defective orthography of their cinematographic machinery, decided to replace it by one of the greater capacity and power. All these sentences, this New Talkies Limited, this organization wants to replace the old machine by a new machine. Now the old machinery was obtained at a cost of rupees 20,000, but the cost has in the meantime increased by 50% in the aggregate. So when it was purchased, the old machine was purchased much earlier at 20,000. Now at this time, the prices have increased by 50%. Now 50% of 20,000 is 10,000. Now if we purchase the same machine, it may cost 30,000. The new machinery, it is estimated, would cost 50,000 and the old machinery would realize 5,000 rupees scrap value. Now, the new machine, which is of a greater capacity, now when we are purchasing, the new machinery cost rupees 50,000 and the old machinery scrap value we are going to get 5,000 rupees. You are required to allocate the cost of 50,000 between capital and revenue expenditure and to give the necessary journal entries for recording the above transaction in the books of the company. Also show the machinery account. So 3 things are there. First of all, we have to find out how much amount to be capitalized and how much amount to be charged to revenue account. And how much amount to be charged to P&L account and how much amount to be capitalized. Capitalized means charged to machinery account. Secondly, we have to pass the journal entries. Thirdly, we are required to make the machinery account. This is the problem, right? Now, see the solution. First of all, calculation of revenue charge. How much amount to be charged to revenue account? Revenue account means profit and loss account. So, estimated cost of replacement of old machine. First, we calculate estimated cost of replacement of old machine. The old machine had an original cost of 20,000 rupees. Now the prices have increased. The rates have increased by 50%. So 50% of 20,000, 10,000. The replacement cost will be 30,000. From this 30,000, we subtract the scrap value realizable from the sale of old machine. 5,000 rupees is the realization value. Deduct 30 minus 5. 25,000 rupees is the revenue charge. That means 25,000 rupees will be charged to profit and loss account. First part complete. Second, calculation of capital charge. How much amount should be charged to machinery account, the asset account? For that, we take total cost of the new machine. The cost of the new machine is 50,000 given in the problem. From that, we deduct the replacement cost in its original form. The replacement cost in its original form is 30,000. Deduct 30,000. So 50 minus 30, 20,000 rupees will be a capital charge. That means this 20,000 rupees will be charged to machinery account. Machinery account will be debited by 20,000. Profit and loss account will be debited by 25,000. We have calculated. First part we have completed. How much amount to be charged to revenue account, how much amount to be charged to capital asset account. Now journal entries. The first journal entry is replacement account data to cash. How much amount is spent in purchasing the new asset? The new asset is purchased for 50,000. New asset is going to be purchased for 50,000. So entry replacement account data to cash, 50,000, being the cash spent on purchasing the new machine. Second, cash account data to replacement account. Cash is received on sale of scrap. How much sale of scrap? 5,000, being the sale proceed of old machine. Now third and final entry. How much amount to be charged to revenue account, P&L account? 25,000. The profit and loss account data 25,000. How much amount to be capitalized, charged to machinery account? 20,000. The machinery account 20,000. To replacement account 45,000. 25 plus 20, 45,000. Being the amount allocated to revenue account and capital charge. Now see, automatically replacement account is closed. First entry we have debited replacement by 50,000. Second entry credited replacement by 5,000. Here replacement account is credited by 45,000. 5 plus 45, 50,000. 50,000 debited. So replacement account is closed. So these are the journal entries. Now we are also required to make the machinery account. The machinery account already, the old machine, the balance was 20,000. To balance brought down 20,000. That opening balance will not be touched. That will remain intact, 20,000. Now how much amount is to be charged to capitalized? Net amount to be capitalized 20,000. So 20,000 rupees we are charging, we are debiting to machinery account. So machinery account to replacement 20,000. Replacement account 20,000. Here you can see machinery account is debited by 20,000 to replacement. So replacement 20,000. So total in the machinery account is 20 plus 20, 40,000. 40,000 rupees is the balance of machinery shown after replacement. So 40,000 to by balance carried down, balancing figure 40,000 to balance brought down 40,000. That's it. So this is the problem number 17. First time we are doing a problem on replacement of asset. So 3 steps. First step, calculate how much is the amount to be charged to revenue account. Second, how much amount to be charged to machinery account, and journal entries, right? So procedure, estimated cost of replacement minus scrap value realized, the amount to be charged to revenue account. What is the cost of the new asset minus replacement cost, the amount to be charged to machinery account. That's it. This is the end of problem number 17. Now 18th problem you see. A water supply concern has had to replace a quarter of the mains and lay an auxiliary main for the remaining length in order to augment supply of water to a locality. So here water supply concern is there. It is replacing a quarter of the main. Quarter means 1/4. Quarter means 1/4 of the main. One pipeline is there which supply water. So 1/4 of the main we are replacing. The total cost of the original main was 4 lakh. The total cost of the original main, old main, was rupees 4 lakh. But we are not replacing the complete main. We are replacing only the quarter main. Quarter means 1/4. So 4 lakh rupees, 1/4, it will be 1 lakh. The original cost of the total main is 4 lakh and we are replacing only 1/4. So 1/4 of 4 lakh is 1 lakh. The auxiliary main cost 4,50,000 and the new main cost 1,75,000. Now we are replacing with a bigger capacity. The total expenditure to be incurred now on auxiliary main and new main is 4,50,000 plus 1,75,000. So 4, 5, 6,25,000. The total expenditure to be incurred now is 6,25,000. It is estimated that the cost of laying a main has gone up by 30%. Just like the previous problem, because the inflation, due to inflation, the prices have increased. So the old main, if we replace now, the prices will increase by 30%. Part of the old main realized 15,000. Scrap value of the old main, 15,000. Pass journal entries to record the above and show the total amount to be capitalized and to be written off. Capitalized means how much amount to be charged to the asset account, and written off means how much amount to be written off to the revenue account, profit and loss account. Exactly similar procedure, same procedure will apply. Calculation of revenue charge. Revenue charge means how much amount to be charged to profit and loss account. So first we'll take replacement cost. The total cost of the original main was 4 lakh, but we are replacing only the quarter, means 1 lakh. So estimated cost of replacement 1 lakh, and the prices have increased by 30%. So 1 lakh plus 30%, 1,30,000. 30% of 1 lakh is 30,000. So 1 lakh plus 30,000, 1,30,000. From this we deduct the scrap value realizable by dismantling the old asset. 15,000 realization value of old mains. Deduct 130 minus 15. 1,15,000 is the amount to be charged to revenue account, profit and loss account. Next, amount to be charged to asset account, capital charge. How much is the amount as a capital charge? Total amount to be spent on auxiliary main and new main. It is given in the problem 4,50,000 plus 1,75,000. 4,50,000 is the amount required on auxiliary main and 1,75,000 we require for new main. So total 6,25,000 expenditure we require. From this we deduct the replacement cost of the original main. What is the replacement cost? 1,30,000. So deduct 1,30,000. So 6,25,000 minus 1,30,000, 4,95,000 is to be capitalized. Capitalized means this amount has to be charged to the asset account, debited to the asset account. Over. First it is asking you how much amount to be charged to revenue account. Second, how much amount to be capitalized. Both we have calculated. Now journal entries. Exactly same entry is what we have done in the previous problem. First entry. Replacement account data to cash account for the amount spent on the new main and auxiliary main. The total amount required to be spent on new and auxiliary main is 6,25,000. The amount 6,25,000 being the cash spent on the purchase of auxiliary and new main. Second entry regarding sale proceed of the old main. So sale proceed, cash account data to replacement account. Sale proceeds of the old main 15,000. Now we have to charge profit and loss account data 1,15,000. Now machinery account data 4,95,000. To replacement account 6,10,000. Add up these two, you will get 6,10,000. 6,10,000. That's all. So 6,10,000 credited. Here 15,000 credited. Add up 6,10,000 plus 15, 6,25,000. The replacement account is debited by 6,25,000. That's all. So this is the end of problem number 18. Come on, now we'll start the next problem, 19th one. See the 19th problem. A railway station was built in 1980 at a cost of rupees 3 lakh. It was replaced in 2000 by a new railway station at a cost of 16 lakh. The originally railway station was built in 1980. The cost at that time incurred was 3 lakh. Now we are replacing the old station by a new station. The new cost to be incurred will be 16 lakh in 2000 year. Since 1980, prices of material have risen by 250% and the labor rates have tripled 3 times. Labor rates have increased 3 times since 1980 to 2000. And the proportion of material and labor in the old station was 2:3. 2:3 means 2/5 is the material and 3/5 is the labor charges. This is the proportion of material and labor in the old station. The old station was made in 1980 at a cost of rupees 3 lakh. Old materials valued at rupees 25,000 are used in the construction of the new station and included in the cost of 16 lakh. That 16 lakh includes 25,000 rupees of old material which is used in the new station, and rupees 42,000 is realized by the sale of old material. Some old material was sold and cash realized 42,000. Give journal entries for recording the above transactions. That's it. So exactly similar to the previous problem. First of all, we have to find out how much amount to be charged to revenue account and how much amount to be capitalized. Then we have to pass the journal entry. See here, the old station was made in 1980 at a cost of rupees 3 lakh. The cost of railway station in 1980, 3 lakh. In this 3 lakh, we have material and labor in the ratio of 2:3. 2/5 is material, 3/5 is labor. The cost of material 2/5 into 3 lakh is 1,20,000, and cost of labor 3/5 into 3 lakh, 1,80,000. So we have bifurcated 3 lakh rupees into material and labor. 1,20,000 material and 1,80,000 labor. Now we have to find out the replacement cost. If we replace the new station, how much cost it will incur? It is given in the problem that material price increased by 250%. So earlier material cost in 2000. Earlier the material cost was 1,20,000. Now 250% of 1,20,000, it will become 3 lakh. That means the material which were purchased in 1980 at rupees 1,20,000, now it will cost to 3 lakh rupees because material prices have increased by 250%. And labor charges have tripled. How much was the labor charges incurred in 1980? 1,80,000. Now 3 times it has increased. So 1,80,000 into 3, that will become 5,40,000. That means the replacement cost of the old station by new station at the current rates is 8,40,000. This is called estimated cost of replacement of old station. Now, cost of replacement, just now we got it 8,40,000. From this, we subtract the material which are reused and the material which was sold away, scrapped. Both will be deducted. So material reused is 25,000 and material sale of old material to 42,000. So total 67,000 we deduct from the cost of replacement. So the net figure 7,73,000. This is the amount to be charged to revenue account, profit and loss account. Amount to be charged to profit and loss account is 7,73,000. Now we have to find out how much amount to be capitalized, charged to station account. Now, total amount required in the new station 16 lakh. The new station total cost required 16 lakh. From this we deduct the original cost, replacement cost of the old station. The replacement cost of the old station is 8,40,000. 8,40,000 is the replacement cost of the old machine, old station. So 16 lakh minus 8,40,000, you get 7,60,000. This amount is to be capitalized. Capitalized means it should be charged to station account. So first thing, we have to calculate how much amount to be charged to revenue account, and secondly, how much amount to be capitalized. So here 3 lakh rupees we have bifurcated into material cost and labor cost. Material cost have increased by 250% and labor charges tripled. So we got the replacement cost. From replacement cost, deduct the material reused and material sold. Old material sold. Deduct it, we'll get the amount to be charged to revenue account. From the cost of the new station, deduct the cost of replacement, the amount to be capitalized. Now journal entries. Exactly same journal entry. First journal entry, replacement account data to cash for the amount spent on the new station. The new station cost 16 lakh. So replacement account data to cash 16 lakh being the amount spent on new station. Now cash account data 42,000. That means the scrap value. The sale proceeds realized 42,000. So cash account data 42,000. Material reused account data 25,000. Material reused account data 25,000. Then to replacement cost 67,000. Being the cash realized on sale of old material and material reused. Then profit and loss account data. How much amount is to be charged to revenue account? Here 7,73,000 is the amount charged to revenue account. So profit and loss account data 7,73,000. Station account data. How much amount is capitalized? 7,60,000. 7,60,000. Station account data 7,60,000. To replacement account, add up both these, you'll get 15,33,000. Being the amount charged to revenue account and being the amount capitalized to station. That's it. Now you can confirm it. This 67,000 plus 33, 15,33,000, 16 lakh. 16 lakh rupees debited. Over. This is the end of problem number 19. Now I am reading out the last and final problem, problem number 20. This is the final problem on electricity companies. Jaipur Electric Supply Company Limited, which adopts the double account system, rebuild and re-equip and power station and the connecting lines during the year 1994. For this purpose, they purchased material for rupees 10,85,000. The current year 1994, during the current year, it is replacing the power plant. The power plant requires purpose, they purchase material 10,85,000 and used stores worth 4,90,000 from the existing stock. The cost of labor come to 5,22,000. The estimated supervisory overheads attributed to this project are 13,000. Now see, these are the costs incurred on constructing the new plant. Constructing the new plant, we add up all. Actually, material purchase 10,85,000, material used from stock 4,90,000, labor 522, overheads 13,000. We add up all these four amounts, we'll get the total cost incurred in constructing the new plant. The station was erected in 1954. The old station was erected in 1954 at a cost of rupees 5 lakh. This was the original cost of the old station which was erected in 1954. An index of costs in this line stood at 1994 at 385, taking 1954 as the base year. So in order to find out the current replacement cost, we use index numbers. It is treating that the base year was 1954. Always the base year index will be 100. The base year index will be 100. So 1954 the index number was 100 and current year 1994, the current year 1994 the index number is 385. By using this index number we can find out the current cost of station, replacement cost. Discarded material from the old station fetched rupees 12,000. The old material was sold for rupees 12,000. Show journal entries to record the above transaction and give working notes showing how you arrived at the figures. That's it. Exactly similar. First of all, amount to be charged to revenue account. Amount to be charged to revenue account. Amount to be charged to revenue account. Estimated cost of replacement of power station. So 5 lakh. Estimated cost of replacement of power station. So 5 lakh into 385 by 100. We are converting the cost in 1954 to the present cost. So we multiply the correction factor, that is index number of current year divided by index number of base year. So index number of current year 385. Index number of base year 100. So 5 lakh into 385 by 100 will get 19,25,000. This is the estimated cost of replacement. Estimated cost of replacement. From this we deduct the sale proceed. The sale of discarded material 12,000. Deduct 12,000, we'll get amount charged to revenue account 19,13,000. The amount to be charged to revenue account 19,13,000. Now amount to be capitalized. So first we take cost of building new plant. The cost of building new plant, material purchased, material taken from existing stock, labor, overheads. Take the total of all these four. 21,10,000 is the total cost incurred in the new plant. From this, we deduct the replacement cost of the old plant. The replacement cost of the old plant 19,25,000. Deduct 19,25,000. 1,85,000 is the amount to be capitalized. This is the amount to be capitalized. That's all. So we have calculated how much amount to be charged to revenue account and how much to be capitalized. Now journal entries as usual. The first entry, replacement account data to cash. The total cost incurred 21,10,000. 21,10,000. This is being the cost incurred on building new plant. Second, sale proceeds. Cash account data to replacement account. 12,000 rupees is realized by selling the old material, being the cash received on discarded material. Last one, profit and loss account. How much amount is charged to revenue account? 19,13,000. So 19,13,000. Then plant account data. How much amount is capitalized? 1,85,000. Plant account data 1,85,000. To replacement account 20,98,000. Being the amount charged to revenue account and the amount capitalized. That's all. So this is the end of problem number 20. Totally 20 problems I have explained in detail regarding Electricity Companies Act. Electricity problems. Applying the provisions of Electricity Companies Act. So if you are regularly watching all the videos, definitely you will get a lot of command on this chapter of electricity companies. First video I have explained you the complete detail regarding the provisions of Electricity Companies Act regarding preparation of financial statements, then finding out the surplus and disposal of surplus, then replacement of fixed asset. First video completely I have explained you. Starting 8 to 9 problems I have solved, short problems I have solved. Then after that 20 main problems. The first 8 problems I have solved on preparing the revenue account, net revenue account, receipts and expenditure on capital account, general balance sheet. First 8 problems. Next 8 problems I have explained about capital base, reasonable return, surplus, disposal of surplus. Last 4 problems. These 4 problems I have explained on the replacement of fixed asset in double account system. That's it. If you are satisfied with my lecture, give a like to the video, share this channel among your friends, among your group, so that more students can be able to watch these videos and gain the knowledge. And give your comments regarding these lectures. And lastly, don't forget to subscribe my channel if you have not yet subscribed. So this chapter, Advanced Corporate Accounting, 2 topics I have completed. Holding companies and this electricity companies. The next topic is price level, accounting for price level changes. That I will start in the next video. Till then, goodbye. Take care of yourself. See you again in the next video.